Hi and welcome to the market alert for Monday the 7th of December 2020. So on Friday, stocks saw to record highs as dollar dumps after dismal data. So the non-farm payroll figures are not as expected and causing a bit of a problem for the US dollar. So let's have a look at the US dollar index. This is provided by bar chart, as you can see in the top left there. And this is the maximum data available going all the way back to 1980. And if we look over here, we can see this is where we are currently. I'm just going to zoom in. Let's just go down to 9 months so we can get a closer look at prices. And you can see that they've certainly been falling. But if we go to the max of data, the amount of maximum data we've got available, you'll see that it's no great shakes at the moment. We've got 88 here for 2018. You can see there January. This needs to be taken out if prices are to move lower. And then down here we've got the psychological level of 80, and this is around 75 I would have thought, and then down to the 70 level. So there's no big deal here yet as far as the dollar is concerned, but it's certainly losing value. It's not, if we start taking this sort of shape here, then it will be interesting. But at the moment we've got to get through this low here, which is around the 88 level. So it's got to break 90 to move lower. So just keep an eye on that one. Let's have a look at Friday. Unfortunately, I needed to free up some space for the computer and managed to delete the file that I had for Friday. So I'm going to have to go through this way. I'm going to start off with the daily chart. And you can see how quiet the market is. It's stuck in a range, and we're still in this on the overnight. Very, very quiet as the market waits for news of the US election, Brexit, etc. So it should liven up in the next few days. But you can see at the moment we're stuck in this range. Market still finding support at the 20 bar moving average, but trading below the 5 bar moving average once more. And again, the implied volatility is indicating that we are due for a correction in this market, as I've spoken of before. And you can see this dropping down on Friday down to 19.28 from 20.19 there. So again, as I've said, below the 20 bar moving average as well here, and back to green in the color coded version as well. So the market due for a correction, as can be seen by the lofty levels. If I just reset this chart, you'll see that prices have moved up significantly and they are due for a correction. When that comes, who knows? It's down to the players, but one thing is for sure, that the market's manipulation by the bankers is used in order to get more funding from the governments. But also you've got to keep in mind that we're in the Santa rally phase as well, and bonus season. So they're going to keep the market on the highest for as long as they can before they start to allow them to correct. So we could be seeing this sort of sideways move for the next couple of weeks until we get some sort of news either from the Trump court cases or Brexit, whatever. So don't expect too much as we head into the Christmas season. So on Friday, the market traded below the 200 MA initially in the futures market. We can see it coming on stream, and then found support down at the 13,200. Then got above the close and the 200 MA and the 20 bar and the 5 bar. So through all of them, but the market had no desire to really move higher. It drove through the DP level, which we see here, but then it just traded sideways. It's just a lackluster market drifting back down below the DP level, not on any great volume, before finding support around the 200 MA and then back again. And then there was some news that came out there, quick spike in the news, and again you can see this was used to allow the traders to sell. All of this selling that you can see here, and then once we got back below the R1, the 13,300, the market then just drifted all the way back down to the DP level there. Market breaking this, but finding support with buying coming back into the market at the previous day's close. This is the non-farm payroll news. I'm not going to go into detail with that because you can see the market's reaction is negligible. And then in the afternoon, the market again 200 MA above the DP and above the averages, and then just moving to the upside. There was some selling initially, but then you can see the buying being taken back up at the 20 bar moving average and prices being moved back up. This then creating a resistance as prices approach this level once more. Again, look at the huge volume at this level. Prices break the 20 bar moving average and then come back down towards the 200. Get a 78% retracement there, and then prices just drift before following the Dow into their all-time high at the close of trade. And that's the Dow I'm talking about with regards to the all-time high. Just have a look here. You can see we headed back to this on Friday. The market has actually put in a new all-time high on the overnight market. If you have a look at the 5-minute chart, just drag it over here, and you'll see there that we do have a new all-time high that was made here. And if we go back to the daily chart, you will be able to see what that is by just getting the retracement tool, clicking on there. I'm just going to delete the one below it, and this is the new all-time high, 30,269 for the Dow at the moment. So what news have we got to move the markets during today and this week? Well, today we got absolutely nothing apart from Brexit talks that are going on, and for the rest of the week it's also very quiet as well. We've got absolutely nothing. It's really quiet for Monday, Tuesday and Wednesday. We only get news from Thursday when we get quite a bit of news. We've got the EU main refinancing rate, monetary policy statement, and then an ECB conference from Lagarde. US claims, the usual weekly one. And then Friday, just the core PPI and the PPI month on month, and that's it. So a very quiet week as far as news is concerned to actually move the markets. Like I say, the Brexit talks are still going on. If there is a no deal Brexit, that will liven the markets up. So you could, find yourself in a trade and then that news is announced. So just be cautious of that. So yeah, the volatility also pointing, as I say, towards a correction at the moment. So of course, if we don't get that this week, then the implied volatility is just going to fall off a cliff as well. And the lower it goes, the bigger the correction, which you will see in previous times where this has occurred. And then you get the corrections in the market, either minor or major. Of course, this is the virus, but you'll see all these little corrections, and you'll see low volatility as a precursor. Of course, things have changed since March, when we had the record high volatility here. To bring back those levels down to this sort of area here will take some doing, but given that there's no news this week, we could see a drop off the cliff for the implied volatility there. Okay, that will do it for this one. If there is anything else to report, I'll let you know, but otherwise, as ever, thanks for watching. See you in the next one.